going on, guys? Welcome back to another video. And in this video, we're going to be going over a couple of stocks that are heavy on my watch list right now. They're in some pretty attractive buy zones in my opinion. And we're going to also talk about some possible far out call options with great risk to reward, associated with them. As always, shares are going to be safer, so consider shares over options, but these options do have a lot of upside potential to them given the current market sell-off. I also know that a lot of people are just taking a break from investing right now, not watching too much YouTube. So if you are watching this video, thank you so much for stopping by. And I appreciate your views and any likes you want to drop. So let's get into it. All right, so first up is the Tattooed Chef. Now, I do like this company a lot. They had a brutal day, so down 11.20%, up a bit after hours. They dipped down to 1650, which I haven't seen Tattooed Chef dip this low in a long time since I believe they were a SPAC. So I think this is an attractive zone to buy in if you're patient. I think the short to midterm is bearish on these small cap and SPAC and de-SPACed stocks. But if you're patient with this one, I do see a lot of upside potential in the coming years. They are expanding the stores that they're in. They're getting full shelves in stores like Target and Walmart. They are expanding their product line, so more options for customers. And I do think this company will do well in the coming years. But the short term is likely going to be a bit bearish. So if you're going to buy this one, I would just scale in. I think this is a great spot to buy. And as it dips, maybe add in waves. So they did have some bad news come out. And I believe that's why they are down, along with the entire market selling off. So along with the entire market selling off, Tattooed Chef did have some not so positive news come out. And that was just about insiders selling some shares. This came out on April 18th. And it was saying how Salvador Galletti was the biggest sale of Tattooed Chef stock in the last 12 months. So he did sell below the current price of $18.71. He wanted to cash in some shares. And as a general rule of thumb, they say it's discouraging when insiders are selling below the current price because it suggests that they are happy with a lower valuation. But this doesn't mean that the company's bad. They could be selling for a variety of reasons, similar to what I mentioned with Palantir stock. Maybe this guy's going on vacation. Maybe he's investing in other ventures. You never really know. It was only 2.5% of his holding though, but it was the largest sale in the last year, as you can see by this graph. And then this article came out today talking about the CFO's abrupt departure. I'm not too sure on the reasons. It doesn't really, disclose what the reasons were, but it says Cargill resigned and appointed Stephanie Dykman to replace him as CFO. She served as chief operating officer and secretary at the company and has over 12 years of food industry experience overseeing financials. Now getting into the options plays, obviously shares are always going to be safer because they don't have an expiration date, but picking up 100 shares of Tattooed Chef would cost you, $1,700, where this only costs you $485 right now. So I think the upside potential is very nice here. As you can see, it was down $125 today. Pretty good open interest, pretty good volume. Here is the risk to reward. I set the stock price range from 15 to 35 just because I do believe this will head higher in the coming years. And this has over 600 days till expiration. Now, basically, you can see the upside here. If it goes back to $25 by next April, you're making 73% on that. I believe it'll head higher than that. And you can just go on to Options Profit Calculator, mess around, and see the upside potential here. Some people also might want to buy a deep in the money far out call option and sell covered calls against that option. So in that case, you would sell and you could pick something like July 16th and you could make some money while you're waiting for this thing to hit. And that's the poor man's covered call. That is another way to make money, during this time. Next up is IPOE, and I already have plenty of shares of this current SPAC. This is SOFI. However, I'm looking at the LEAPS for this, and they are very inexpensive for how much time you get until expiration, and the upside is definitely there. Now, I know there's a lot of short interest on this one, but they also have a lot of catalysts coming up in the future. So the midterm catalyst would be like the bank charter, just finishing up this SPAC merger and getting the ticker change, and then getting some more analysts to, upgrade this company, give some price targets, and get some more coverage. I do think that they will definitely head higher, and they are just a part of this SPAC sell-off right now, and these options are very mispriced in my opinion. So as you can see, the 20 strike is what I would personally go with. Some may choose to go deeper in the money. Some might want to go out of the money even further. I typically play pretty close to the current price. But I just think with almost 2 years to expiration, this is a very good risk reward. And I would try to get this one. Today it fell under $400. I would try to pick it up, at 385 or 395. It gives you plenty of time, even if in the short term the option, goes negative for a little bit and you're down on it, you have plenty of time. So here is the risk reward. I put the graph 14.25 to 35.25. As you can see, if you can pay 385 for this, that is a steal. And all you need this to do is just go up a little bit, and you can just see, there's not a lot of chance that this goes bad. If it even goes back to, let's say, $26 by next March, you're up over 100%. So this is one I almost pulled the trigger on today, and if we have another bad day tomorrow, I will likely be picking this one up. Another stock that I'm watching very closely is Open Door, currently sitting around 17.24, and it hasn't been this, so oversold in a while. So I'm definitely watching it. The LEAPS that I would buy is down $80 today. Now, ideally, I would like this one a bit cheaper. So if we get some more selling pressure, maybe it drops into the 16s, this week, then this premium could come down under $600. I think that would be a great buy zone and give you plenty of time for this to return back to obviously over $20. And you could even play the extrinsic value as well. So this one has a ton of open interest and volume. If that's too expensive, there's a ton of other strikes that you could choose. I like playing closer to the money, as you guys know, or at the money. Some may prefer to play in the money, but this is one that I'm watching very closely, and I think this is a solid company that's just getting beaten down with the rest of the market. I'm going to throw up a screenshot of some other stocks, far out options that I'm watching at the moment. I don't want to make this video too long, but these are some of the ones that I'm watching. I think the 2023 call options are very inexpensive for these right now. So if we continue to get this selling off, I will consider adding these. I'm not too heavy into options right now. I'm about 95% shares, and I have a couple open options positions that are far out. I have a PLTR call out to January of 2022 right now, but there are some that I'm looking to add for 2023 if the price is right. And you can always add and then average down if you need to. But like I said, I'm not going too heavy in the options right now, but the premium on some of these is very inexpensive. And I believe when things rotate back to the small caps and we start picking back up again, these will make some nice gains for us. So keep that in mind. Obviously, shares always safer, but these are just ideas at the moment. I don't have any of these 2023 options yet, but I will let the Patreon members know if I do add them. So hope you enjoyed the video. Please like and subscribe, and have a good one.